The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block. With your hosts, Mark Longo from theoptionsinsider.com, Mark Sebastian from optionpit.com, Mike Tusaw from KnowYourOptionsInc.com, and John Grigas from Options Express.
Welcome back to the Option Block, and we have a fun lineup for you guys today on the show. Joining us in the rotating Options Express seat is none other than Mr. John Grigas himself. John, welcome back to the show.
Good to be here. Miss you guys.
We miss your sultry tones whenever you're not on the show. Tim and Rob are great, but your voice just has that subtle baritone quality that the ladies just love.
Yeah, I'm here quite quiet during the other segments of the show, so I'll see if I can light a little fire under each of them, see if I can get them to speak up a little bit, voice their opinions.
You can mix it up a little bit with them. You know, I think they're just overwhelmed by being on the same show as Mike Tusaw. That's what it is, you know.
I've heard that, yeah.
He's quite the presence. You know, talk about ladies swooning, my God. When we did that live show a couple of weeks ago, well, we had to actually lock the doors. It was a little embarrassing. I felt bad for him, actually.
I was wondering why there were so many women hanging around the booth after the show ended, but now that explains it.
Oh, yeah. Got to get a piece of the Tusaw.
The Tusaw groupies.
Autograph.
There you go.
Maybe a little bit of signed clothing. You know, you don't know. Whatever the guy's got to do. It's an impressive spectacle to behold. Let me just say that.
You guys are making me laugh so hard. I got to just keep this thing, my microphone muted so much.
In case you haven't guessed, listeners, that other voice on the line is Mr. Tusaw himself. We should be joined by the greasy meatball shortly. He is Mr. Sebastian. He is somewhere in transit, and so he should pop up relatively shortly. I, of course, am Mark Longo from the Options Insider for the few of you who aren't listening to this on our radio network right now. With that, let's dive right into the trading block.
The trading block.
And welcome to the Trading Block. This is the segment of the show where we discuss what's going on right now in the current macro climate of the market. And there's a lot of interesting things going on right now. The market was it was an interesting day. It started off down a little bit worse than it ended up closing. Got the SPOOs down about 2 handles to 1197. We've got the Dow closed down about 25 points. VIX cash closed up about 0.48 to 1852. Gold, GLD, closed 133.48, up $1.28. I didn't see, what did silver end up doing today, Mike?
Silver ended up ahead 47 cents. SLV did, that is, at 27.21.
Are you guys back in your silver collars, or are you still called away and waiting to get back in?
Fingers on the trigger, called away waiting to get back in. We came close the other day, but just didn't quite pull it, so we're waiting patiently right now.
Do you want to reveal to our listeners the magic entry level for KYO, or is that the secret sauce?
Well, it's the secret sauce, but it's not really all that secret. If they want to call me, I'll tell you what we're looking at. But we're looking at a mix of we want to see a good level of premium. We want to see the chart looking about right. We want to see a bunch of things, but it's not necessarily a secret. It just would take too long to say right now.
And of course, the market was brought down a little bit by all of this craziness over in Europe, particularly Ireland. You know, they've been going back and forth over the weekend about this bailout package for Ireland. I'm not sure how much you guys have been watching this latest bailout drama over there, but it is kind of interesting from the perspective of Ireland made a name for itself and essentially revitalized its economy after the dot-com bubble burst by becoming a corporate sanctuary, essentially. They had little to no corporate tax. And so as a result, you had a lot of multinationals set up shop there in Dublin in those environs. And now that they're being bailed out, all the countries coming to their rescue are telling them, well, you're going to have to fix that corporate tax policy. They don't want to bail out a country that they essentially see as maybe stealing some of their business through a policy that they don't view as fair competition. Ireland's kind of put a line in the sand saying we're not going to change that policy. But if it's a choice between not getting the bailout money and changing that policy, they might have to change their tune. And so even if they do get the bailout, we might not see the robust, healthy Ireland emerge from this the way they were before with so many multinationals headquartered there. You might see a flight away from Ireland. What do you guys think about this?
Well, I think it's like anything. If they want money, they're going to have to give us something in return besides, paying the money back. And I think, getting the multinationals back out of that country, back to, America and Europe is what they're going to have to concede to. I really thought the markets would have done a lot better with Ireland finally getting that last country off our plate as far as, sovereign debt risk and default. And I looked at the futures last night early on when the S&P D's contract opened up. It was up higher, probably near its highs of the days. I think also, that Goldman Sachs and insider trading, really put a hurt on the rest of the financials and kind of took center stage, overshadowing the Ireland bailout.
This whole Goldman insider thing, I mean, I know, John, you were on the floor. If Sebastian was here, he could probably speak to this as well. I know when I first got down there, all the old-timers told me, fold up your sheets and go home for the last 10 minutes of the day because that's when the pickoff paper comes in. And it was just rampant and endemic at the time. It's been cracked down on a bit since then, but it's kind of a well-known thing that these types of trades go up, and the notion that an iBanker would tip off their largest clients, either iBanking clients or brokerage clients, to a latest analyst upgrade or some other internal things going on at the brokerage firm. This is old hat, I think, to anybody who's been around the business for a while. So the notion that this is shocking or somehow would crush the stock, I guess, of course, if they have some concrete evidence, is going to be a material cost to this for Goldman. But I can't imagine anyone being too surprised at the notion that Goldman is leaking juicy tidbits to some of their biggest customers. Yeah,
I'm not surprised at all with that there is insider trading that exists. It's definitely par for the course. It's part of the game. It happens, and I don't think that's anything that would spook or shock the markets too much. But it's definitely something that I think it played a role in today's marketplace. But I don't think that it was really too much of a shocker at all.
Yeah, Mark, we were just discussing the amazing shock that Goldman would tip off some of their biggest clients to some of the deals they had going on.
No.
See, the biggest problem I have with that is how do you become a Goldman client? I mean, that's the problem I have. Because I don't mind tipping their best clients off. I just want to be one of those best clients.
Yeah,
you got to have the amount of money. There's actually, it was interesting.
Give them $5 million.
No, it's more than that. It's way more than $5 million.
I thought 5 was their minimum these days.
No, that's their minimum. But that's not how to be one of their best clients.
Yeah, you don't get the juicy tidbits for $5 million. It's probably way higher than that.
No, it starts with a B. Starts with a B. In order to be one of their top clients.
Yeah, the stuff I saw said that they were leaking a lot of stuff to mutual funds and pension funds and asset managers of that class. So these are guys who they bring in size money to the table. It's not some wealthy private client guy who's coming in with $10 million. It's more substantial than that, it seems like.
Yeah, my understanding was, that just when we were on the floor, we all kind of knew about this on the floor, believe it or not.
That's what we were just talking about, actually, that, when I first got on the floor, the old-timers would walk off in the last 10 minutes of the day because that's when the pickoff paper came in.
Oh, yeah. Well, and you could tell with Goldman what trade was going to be good and what trade was going to be bad. If their desk wanted the trade, you did as much of it as you could. If their desk wanted no part of it, you just stayed away or did as little as you possible. There was nothing worse than what's your guys' offer at 60 cents, buy them, 70-cent bid coming out. How now? Awesome. And those guys, they wouldn't run you over in the same way like a Smith Barney would, where, you would sell Smith Barney puts and then you'd look down and the stock was already down $2. But the way they would run you over would be just in price. They would have a much bigger top, and then over the next couple days, the position would blow up on you. It wasn't like a straight-up quick pick-off, like kind of a Smith Barney used to do. There was this guy on the Amex named Ernie. We used to call him the Widowmaker because he would come in and he'd quote 1,000 puts. You'd sell them 10 cents through your offer, and by the time you had a chance to hedge, they were a quarter worse than your bid. So
I don't know. I remember a lot of quick pickoffs coming in. When I first got on the floor in the mid-'90s, they were a little more surreptitious about how they did it. If it was a Goldman customer, they would come in through a Merrill broker and vice versa to kind of hide their activities. And towards the end, when I left, it was just brazen. It would be a Goldman. Let's just use Goldman as an example.
It was ogre.
Could have, yeah. Trying not to name names or name badges, but it could be any brokerage house would come in. Let's say brokerage X. And they have an order for a customer of brokerage X, and they execute that order at 5 minutes to go before the close. And then, sure enough, an analyst for brokerage X firm would upgrade the stock before they open the next day, and it was just like clockwork.
Yeah.
So yeah, I mean, those are the kind of things that I think you get a little bit inured to if you've been around it for a while. And just I think the notion that this would be going on at Goldman, I'd be surprised if it wasn't.
Yeah. Well, part of being a good trader was being able to recognize, hey, this is something I should get the heck out of the way of, right?
Yeah, when they came to your pit out of breath at 2:55 at the end of the day, you got the hell out of their way usually.
Mm-hmm. Exactly. So there were other guys that were worse off than that. I can think of a couple brokerage houses that were far more brazen. And the best part is they'd send their nicest guy in because they knew you wouldn't yell at him too loud.
Yeah, or they send the cute runner in with the order to the pit broker, and that way you wouldn't yell at her because you didn't know what she was doing.
Yeah, I don't know how many times I was in somebody who I like's face, and I'd be like, I'm not yelling at you, I'm yelling at the situation. Oh, those were the days.
And John, I know you guys watch a lot of the commodities over there. Besides gold and silver, you guys watching anything else on the tape over there, Options Express right now? I think didn't cotton hit a 1 month low recently?
1 month, maybe even was it 1 month? I'm not sure, but the cotton is ridiculously hard to trade these days. I talked to a guy that's traded it for the past few years, and he's like, I just feel like I shouldn't even be trading this market. I said, well, that's exactly right. I mean, if you look at the chart, it's an either limit up or limit down trading situation. I mean, it's impossible to trade. I mean, you either have to be right or you're going to lose, the full limit price. So, the people from cotton maybe sit on the sidelines. I think maybe in general people are sitting on the sidelines, and that's kind of contributing to the fact that there's no liquidity in that contract right now.
Yeah, I can imagine if you're a small retail player, calling you guys up and trying to trade in and out of that, it's got to be just nightmarish.
Nightmarish. I mean, go trade something else, and if you don't see another opportunity, another product, for that product alone, I sit on the sidelines until it settles down. I mean, there's no way to risk, a large portion of your capital while the thing just goes limit one way or limit down the other way.
Is there any sort of an ETF or maybe bite-sized retail equivalent that they could use for cotton, or is it pretty much just a big future?
I believe it's just a big future. Mike, do you know if there's a cotton ETF out there?
Not that I'm aware of. And
wasn't Tim talking about bale or something like that? That's a kind of like one surrogate, but it wasn't a very good surrogate for cotton. I remember him saying something like that in one of the recent shows. BALE.
Yeah, if I'm not mistaken, that one was not optionable from what I remember.
Yeah. But it was one of the few ways to go besides diving into the big future.
UBS cotton sub-index total return? I don't know. 155,000 shares for an ETF? I don't know. That's liquidity issues in itself.
Yeah, that's what it sounds like. It's a little bit better maybe way to get in if you can't get in on the futures market, but not too much better.
Yeah, it sounds like we should bail on bail.
Saving that one all week.
I have been.
This is why we need you on the show, Mark.
I know. For the obvious joke.
Increase our quotient of mediocre to poor humor.
Yeah, I mean, where are we without the obvious joke, That was actually my nickname in college, was Mark the Obvious Joke Sebastian. I don't know if you knew that.
Weren't you the basis for the mini medals back then as well?
That's right. That was actually one of the name of their songs was the Mini Medals. It was Obvious Joke by the Mini Medals. It was a huge hit.
Yeah, he played side by side with Izzy Stradlin from Guns N' Roses after he left.
It was huge in Philly back in '87. So.
All right, and with that, I think we'll close out the trading block and dive right into the odd block.
The Odd Block.
All right, and welcome to the Odd Block. This is the segment of the show where we all sit around and discuss John Grigas' wardrobe, which is indeed very odd.
Oh, I better not take a week off. Things have changed around here. Jeez.
Yeah, it's a totally new show. We have a large sartorial contingent of our listeners who like to hear about these sorts of things. But no, actually, the Odd Block is indeed the segment of the show where we discuss some interesting and or unusual options activity that's coming across the tape today. And we're going to start it off with Cisco. This was a big name, if you'll recall, last week on the Odd Block. And they closed out today around 1950. Let me get the actual closing. Yeah, around 1950. So pretty much unchanged on the day. Last week, as you recall, in the Odd Block, there was a lot of bulls coming into play in Cisco. Everyone felt that the crushing the stock was taking was a little bit overdone, and so the bulls were coming out in force in some of the far-off months to put on naked call positions and sell puts and essentially take on bullish positions in Cisco, and we're seeing a continuation of that to a degree today. We had a rather sizable put spread going up tied to stock in the beginning of the session. We had a trader come in buying about 50,000 of the Jan 2012 15-22.5 put spread. He bought the 22.5 puts for $4.31, and he sold the 15 puts for 83 cents. Did that about 50,000 times, and he did it against stock on a 43 delta. So it's about an equivalent. He did about 2.1 million shares of the underlying. That works out to about 348 for the put spread. And it's an interesting trade because it kind of plays into the narrative we've been hearing a lot about Cisco lately, especially as we're seeing in the option flow that everyone and their mother seems to think that the hammering the stock has taken is overdone. And this guy is not taking a straight-out bullish trade. It's more of a cautiously optimistic, cautiously bullish trade where he's putting on the underlying and he's got some degree of downside protection. But it's interesting, and it's also a sizable trade. Cisco usually averages about 126,000 contracts. They did over 160,000 today, 100,000 of that on this one spread.
It's a really weird bullish spread, isn't it? I mean, I could think of a lot of better ways to get bullish than
yeah, I had the same reaction to it. It's kind of almost a negligible type of bullish trade where the guy obviously wants to get in, but he's really just putting a foot in the water. He's doing it sizably, obviously. It is kind of a weird way to.
Does he just think that it's going to run away from 22.5 and he was looking to get a cheap straddle on? I mean, that would make a little more sense relative. If you look at what he was doing in Cisco, maybe this could be a little more market neutral. If he didn't do this one up, correct? He did it. You said he did it.
Oh no, he did a delta neutral.
Yeah, he did a delta neutral. So if we look at the vertical here, and he does it, he does the 22.15.
Yeah, it was 2012. Remember, not 2011.
Right. He does the 2012, 22.5, 15 put spread. That has a delta of about 42. So, he does. I'm only going to put in 100 of these. So then he buys 4,200 shares of stock against that. And really what he ends up with is kind of a weird ratio spread, okay, if you look at it. With the stock right here, if this falls, if Cisco falls to like the 16, 14, 15 range, he's going to do really well. At $15 over time, he makes a killing, okay? So he's actually got a nice positive theta position on the downside. And then as this thing runs up, if it doesn't aggressively run up for him, he's going to have some problems. But if it does, he's going to be in a position where if this thing gets to 23, 24, $25, then he can sell some calls out against the stock and make a pretty good living. But it's a really unique kind of, it's almost more of a ratio back spread than it is your standard or like a kind of a reduced priced hedged ratio straddle than it is more a standard bullish spread when I just kind of the way I'm looking at it, because it actually does make money on the downside and makes money on the upside. So.
Yeah, because he did it delta neutral as opposed to 1-to-1, so he does have some downside component to it. And he's obviously not looking for gamma. He didn't do it in the front month or near months. He did it 2012, so it's more of if it rallies up, he's more of a long vol position he's got on than a long gamma position.
He's taken the long and winding road that leads to Profit Store.
But yeah, we thought it was an interesting positioning in Cisco. It's not just one of these straight up buying calls kind of thing or selling puts, but a mixture, so to speak.
See, I'm not just stuck in 1985. I can pull out 1969 or 70. Revolver was a great album. Everybody.
So you must be super excited that the Beatles are on iTunes now, because now your collection is complete.
Oh yeah, no, I actually have the complete Revolver set as sung by Up With People, which was awesome. So.
This is wrong on every level, I think.
Yeah, you've not heard Eleanor Rigby till it's sung by a big dance crew, jumping around the stage. It's the best.
I think I haven't heard it till I've heard it performed by the Mini Metals. Then it will truly have reached its of cultural relevance.
How long were you in Vegas there, Sebastian?
Just a couple of days, but it's certainly a good time.
Did you guys any good sound clips from the Money Show?
I got 0 sound clips from the Money Show, and here's why. If I didn't want to hear a sales pitch, then I really didn't have anything to record. These money shows.
Welcome to the Money Show.
I know. These money shows are really, they're good and bad. I mean, it was an interesting way to kind of see what everyone was up to, but if you're not prepared for a major onslaught of the hard sell, then I would avoid these. And this was a big step up on the Money Show, the Traders Expo. But yeah, it was interesting. I was in the NFL Network. That Thursday night's game was on the NFL Network for the Bears, and it wasn't on regular TV. So everybody from Chicago was in the sports book, and it was. I don't know that a sports book has ever been so one-sided as the Caesars Palace Sportsbook, with all these vendors and traders in from Chicago watching the Bears annihilate the Miami Dolphins.
All right, and next up on the odd block, we have another tech name, Hewlett-Packard. Good old HPQ closed around $43, up 50 cents. And this is another interesting just position trade more than a size trade. We have someone coming in with a relatively interesting December risk reversal. Coming on pretty early in the session, went up for about 10,000 contracts. It looks like this guy sold about 5,300 of December 45s for 37 cents, and he bought the Ds39 puts for 57 cents. And for you math wizards out there, that's a 20-cent net premium. This also was tied. Everyone's doing stuff tied these days. And it was tied to underlying at 41.86. So it's another guy who it looks like he wanted to put on the underlying and get some puts at a relatively cheaper price, and just for some downside protection. I haven't really been watching Hewlett-Packard's trading too much over the past few weeks. They have earnings coming up, I believe, they have earnings in December. Is that correct?
Yeah.
So it looks like this guy's probably just positioning ahead of that. But yeah, you don't see too many 10,000 contract risk reversals going up that often, especially Hewlett-Packard.
HPQ is an interesting, it's an interesting study in a company that was well run now kind of is it on its way back, and how important is the CEO, because that guy quit and killed the stock.
Oh yeah, this is a post Mark Hurd, whatever the hell that was. It wasn't a sex scandal because nothing ever happened supposedly, but
it was some sort of harassment scandal.
Well, they said apparently now, I guess because he got forced out so quickly, there's some other stuff has leaked, I guess, since then, that he might have actually leaked upcoming acquisition information to that consultant he was supposedly having his little relationship with there, and that apparently the board frowns on that sort of thing. I think they're going to acquire some firm, and he leaked that, so that was apparently, of course, he got gobbled up by Oracle right away, so he did it right, and he got a nice hefty golden parachute for leaving, so no tears shed for him. But yeah, the stock's been in kind of a listless ever since then, because there's no real sense of what's going to run it. And I mean, obviously, in the wake of the whole Carly Fiorina disaster out there. That's a stock that shows the importance sometimes of a good CEO and how they could drive it into the ground. They really don't know what the heck they're doing, as she obviously did not. Because who doesn't need to merge printers with low-priced, redundant, compact computers? That makes a lot of sense.
Yeah.
Hey, John, I know last time you were on, you mentioned an interesting one, Mela Sciences, MELA. Have you been keeping an eye on it since then?
Yeah, did you see what happened to it? At
about
3 days later, it hit the sell button really hard, and I mean that thing just sold off completely. But then it jumped back the following day.
Exactly, it's got new life in it again. I was talking about on the last show because we had talked when you were on last week that it was about 9 days to go. Stock was trading $6, and the $6 straddle was trading $4 with 9 days to go. It was insanity. And yet, if you sold that, you pretty much scratched or maybe made a little bit of money because it got down to close to $2, like low $2 range. So if you sold it near around $4, maybe you made 30-odd cents on the deal. I guess since then they have appealed that ruling, and the appeal apparently went their way because the stock gapped up from $2.50 to like over $5, and now is trading around $4.40 something. So if you're looking for a volatile biotech stock right now, MELA is the place to be. This thing is just, I remember the $12 calls, I believe, with 9 days to go, we're trading 25 cents. I mean, talk about this.
Yeah, we had it at like 350 vol or something, wasn't it?
Oh yeah, it was off the charts. It was unmeasurable.
And that condor, that 4-point wide condor, was going for 432 or something like that. Yeah, we had people getting filled at that. Yeah, it was an interesting trade. I think it ended up being assigned, and he could have wrote it again, but chose not to because that trade that they had on, we weren't holding any requirements because obviously the cash you brought in was greater than your loss. But obviously, like we said, when something seems too good to be true, it always going to hurt you.
Things are still moving a bit out there, but it looks like it's settled down. The at-the-money straddle is now about 80 cents. So for a $4 and something stock, that's a little more reasonable than $6 or whatever it was, $4. So yeah, talk about it was a premium seller's dream and/or nightmare out there because if you sold, it was rich, but it was hard to make that pay off in the short term. The way that thing was moving around like crazy. I guess the only way you won really is if you hit that bid on the November 12 calls for 25 cents. But that's one you have to have a death wish to hit those or any serious amount of size, especially in a name like this where you had no idea what the FDA was going to do. We like to keep an eye on this one because it's such a fun and unique name, and they're just moving all the way across the board. It looks like they were heading to zero for a while there, and now they're at least have a short-term lease on life again. And so, yeah, for all of our listeners who are paying attention to MELA, they are back in play again, apparently, after being close to death's door. And we're going to close it out with one of Mr. Tusaw's favorite brands here. Back to the dollar world. Dollar General, DG, closed around $32.20, up $1.25 today. And this is a name. They do an average daily volume of about 400 contracts. They did nearly 17,000 today. It looks like the bulk of it, almost actually all of it, 16,000 plus of the volume was in the December 30 puts. These things were just lighting up across the board today. It looks like a number of sites and newsletters were recommending these as a good sale. I guess a lot of technical analysis people were also coming in and saying that there's a good pivot point on DG around the 30 level, and they were recommending limits at around 29, so the D30 puts were a good proxy for that. So people were hitting these things from all the way up. They started around 45 cents all the way down to about 15 cents at the end of the day. They just crushed these things pretty hard, and the vol imploded out there. But yeah, 16,000 of the D30 puts. So obviously people thinking that that's the place to get in on Dollar General right now.
Well, if you're going to do that, if you're just going to if they're going to unload on puts to that degree, at a certain point, buying the calls becomes worth it, right?
Yes.
You have to go in and buy the calls. This is one of the problems with those newsletters, sites, whatever. If they're trading on their own ideas, then they're going to be way out ahead of you. All right.
Oh God! Or they shorted these a week ago.
Yeah, I mean, it's just, and they're counting on you guys to go in and just unload this stuff. You have to pay attention to the volatility. All right. I'll say this one more time. If you're not paying attention to volatility and you went and sold the very bottom of this dollar tree, you're going to be really, really unhappy when this thing turns around on you, when the volatility increases. This thing could be down tomorrow, and this thing could be up 25, 30 cents tomorrow, and the vol could be up 10 points, and you'll be out a bunch of cash that you'll be stuck in for the next month.
Now, Mark, I was going to give you some credit. I was going to assume that this was the power of your Street.com column, and you actually were the one who recommended shorting these. And
no, that wasn't me.
This was your market-moving power in action, but that's not
no,
the case.
I did Talbots today. There was a big call spread that traded in Talbots. A customer that had bought the 11 calls on kind of the bottom of the market, Talbots came out with kind of some below expectations on October 5th, and it at one point got fallen about 30% off its highs. Customer came in, shockingly, swooped up 5,000 calls that, $10 calls with this thing trading 9 and change, sold them out, and then rolled up to the 12s with this thing trading at about 11.30. So my thought process was, if the guy was right the first time, he's probably going to be right the second time. So, I just suggested buying the 12-13 call spread for 20 cents. You can make 80 cents to lose 20. I thought it was a really good play.
I'm looking at these while you're talking. I'm looking at these volume numbers here on Dollar General. It's just hilarious. You got a 10 lot went up on one strike. You got a 50 over here, 25, 18, 16,043, 10.
Unbelievable.
It's fantastic. I love these names.
Lemmings. We would call them lemmings.
It's funny. I remember these things coming up on the floor where some newsletter would do this, and they would just come in like clockwork every few minutes. People hitting these things. Regardless of price, like you said, regardless of volatility level, just following the herd. And
I know. It was just, that was beautiful when that would happen.
Yeah.
It was a thing of beauty. It was like swimming in a coral reef. It was that beautiful.
Mike, are you hitting these puts out in Dollar General? I know you're very active in the dollar sector, not just from a clothing perspective, but also from an options perspective.
Yeah,
I made an announcement to all my clients that I gotta go get my new wardrobe, and I think that's what.
There you go. It's the Tucson effect in action.
So, yeah, it's one like what you guys are saying. It's what I think the other thing I've heard about in the past, the Army of Ants. I think I've heard that called in the past, and everyone's hitting that, and it's difficult in that if you have someone specifically trading a letter of direction for you, and they're entering everything in as a group right as it happens, then maybe that's okay. But if you're trying to follow a newsletter and you're late to the party, 15 cents, if that's what you're looking to sell, if you really want to own Dollar General at the 30 level, then I guess maybe that's one thing. But you're getting not a very big amount of premium, especially if you're doing a 10 lot, for a pretty good chunk of risk. So, like you said, I'd caution everyone that's in the letter of direction business. Nothing against letters of direction. I have no qualms about them, but make sure you're either set up with a broker that'll get the execution for you right on the spot, or you're not at the party late.
I kind of like the idea, too, of keeping an eye on these calls because this strike is so just amazingly depressed now. And they do have earnings on the 9th, so there should be a run-up eventually, you'd hope, in this vol, unless some more newsletters come out to crush this strike. But if you do have a bullish sentiment on Dollar General, I think they're going to do well ahead of earnings, or maybe you just want to take place in some of that rise that's going to happen ahead of earnings. It might be worth working a low bid on some of these calls and then getting into an appreciably low volatility level that way.
There you go.
At this point, the D30s are so cheap. One of the things about calls and puts is usually selling puts to get long delta implies that you're expecting it not to go down, versus buying calls is such that you're expecting it to rally. Well, this premium has gotten so low, it's 20 cents a premium, that the bet for it to rally versus the bet for it to sell is, there's just no argument for it. These are too cheap. So, I'm looking at the implied volatility of this thing, and it's just unbelievable.
There you go. There's your next Street.com column right there. You could take the other side of this. Load up on these 30s and Dollar General right now.
I may just do that. I may just do that.
I want to see the greasy meatball effect. I want to see 16,000 on the other side of this strike. 16,000 calls going up tomorrow.
Well, I'm gonna title it "Cloudy with a Chance of Greasy Meatballs."
All right. And with that quality humor that you've come to expect from us, we will close out the odd block, and we will roll right into the express/spread block.
The Spread Block, brought to you by Options Express. Options Express lets you trade futures and now foreign futures too, where and when you want. From advanced charting and free daily trading ideas to automated systems trading and free educational resources, Options Express is the online broker for all traders. Visit optionsexpress.com to open your free account. Futures involve substantial risk and are not appropriate for all investors. Please read this disclosure statement for futures and options available at optionsexpress.com/futures risk or by calling 1-888-280-8020 prior to applying for an account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Express/Spread block, and this is where we get the inside scoop on all of the interesting things going on at Options Express right now, what the customers are up to, what some of the inquiries they're hearing, and some of the weird names they're getting inquiries about, like we heard Mela last week. So, John, what is going on today at Options Express?
Well, I wanted to touch on one point that Mike just made on the Dollar General trade. The fact that, this newsletter may have caused the influx of, sellers on the 30-put. Options Express does offer an automated trading service where if your publisher is associated with Options Express, and we have hundreds of them, you're able to link your account to that publisher. So when that publisher puts out a recommendation, it goes in as a group trade, and it's done, I'd say almost instantly. Nothing's instantly these days. But, and that saves you the time of calling your own broker, picking up the phone, recommendation was and getting the order in there. You might be last to the trade and actually get filled at 20 as opposed to what people at the first in line got. But having a broker that can facilitate that, and like I said, we have over 100 different publishers. It's an easy way to follow these recommendations without having to do all the legwork.
The stock moved 3% today. What do you guys think about the DEES? It's trading $32. What do you think about the DEES 30-35 strangle? You could buy it for maybe a quarter, maybe 30 cents. That seems like a pretty cheap bet into these earnings, right?
You can probably get it for around, I'd say a quarter. Yeah, looks like you probably get it for
I think you could get it for a quarter.
I'm sure you could work a dime bid in those 35s and get those no problem.
Yeah, what do you think?
Yeah.
That's not a bad play.
No, I like those 20. Those 30 puts just outright even. I love it in Crush Wild because you know what? It's like a rubber band. It usually pops back.
Of course, with a name like this, it's so illiquid. Like the 35s did 10 contracts today. You might have to lift an offer out there. I'm not sure if anyone's going to come.
If someone was going to make me pay 15 cents, I'd rather go for the GN 35s.
I tried playing that kind of game in another illiquid name recently in SIBO, and nothing trades out there either in the options. And, I was forced to hit bids and lift offers because there was just nobody coming in mid-market on anything because there was just nobody playing out there. And so, you got the 35 strike, you've got 10 went up today and a total open interest of 160. So you could throw a feeler out there. You should throw a dime bid in there for tomorrow and see what happens.
I think I may screw around with that. I think there's something there. That thing is that strangle's too cheap. It shouldn't be not with earnings. You may not even have to hold that into earnings. You could probably get out of it ahead of that. So.
No, I would think you get out of this like the day before, or the morning of kind of thing. Yeah. I wouldn't hold this. No point to hold it through earnings. You've already pretty much got what you need, I think, out of it at that point.
Exactly.
The
other things. Oh, sorry. Go ahead.
So not to cut you off, John, I was going to say, but you mentioned that point you had about auto trading. Not to say that it's bad at Auto Options Express or anything, but just to me the notion of that kind of guru-like mentality where I will sign up for someone and I will auto-execute whatever they say. That to me is horrifying. But so many people obviously do that. I'm sure a bulk of these DEES 30s were auto-executed. But it's just, I mean, look, if you're just doing that, you're probably getting the 15-cent sale at the end of the day. You know, you're not getting the good guy who hit the 45-cent level this morning and then the higher volume.
Yeah, I mean, the minute the publisher puts out the email notice, you know, we're notified. We're notified at the same time everyone else decides to go check their email and take a look at it. But by the time they go take a look at it, we've already got the order built and routed to the floor. So, I mean, auto execution, the auto execute group is a big part of Options Express in the fact that they're able to get these trades done in a timely manner.
And you know, I know I said this in the past, but I have a very good friend of mine that does do one of these auto trade newsletters, and he has said that consistently Options Express is the fastest with returns with fills out of the people that use his auto trade system. I don't know if, you know, to me that says something when one of these guys that does this stuff can noticeably see the execution. I think any of us here would say that kind of knowledge would probably add up to a nickel, which is why you maybe don't want these kind of cheap, you know, really inexpensive brokers. They're not, you know, Options Express isn't just going to send your paper to the highest bidder. They're going to send it to the place where it gets the best fill, unlike a lot of these other services or these other brokerage houses, which is, you know, says something good about Options Express. Let's just put it that way.
That's the important thing. It's one to where if you're just watching this, if you're not at your computer every second of the day, you're going to see the recommendation and you're going to get filled at 15 cents on a short put on Dollar General. So it's definitely something to where execution and the speed of it, it's huge. And I think this is a great example and of the importance of that.
So what else is lighting up the tape there at Options Express today, Jen?
Well, we had a lot of expiration calls, you know, obviously late Friday running into Monday. And I'm sure all of us here have a trading plan. Before we get into a trade, we know our stops, we know our objectives. But you should also have a plan in mind when that doesn't work out and you're in some type of bull or a call spread or a bear put spread and it's expiration Friday. What do I do? Well, maybe, you know, trying to figure that out 8 minutes before the close of the day with a discussion with the broker isn't the time to do it. You're going to want to give us a call and make sure you understand, you know, the risks of being in a spread at expiration. So we always get a lot of calls on that on Friday. You know, we're able to help everyone out, but really there's only three things that can happen to you. It's out of the money, it's worthless, it's in the money on a debit spread and you receive your full profit, or it's in between. And really, if you don't have the money to hold the assigned or exercised position, that's when you have to take some action on the account. You know, we do have a risk department in place that will go through and try to close out people who are adversely going to be affected for an assigned or exercised position come Monday morning. But we do it on a best efforts basis, so we don't like anyone to wake up Monday morning with a surprise. You know, one of the things that we saw in Amazon last week, now that we have the weekly expiration, so this was November 12th, Priceline closed at 165.68 off the top of my head. But in the aftermarket on Friday, which trades, I believe, till 8 p.m. Eastern, it traded down to almost 165, okay? And it did it in about, I think, say the first hour, but I didn't see exactly where it closed. But I saw some 165.18 prints, 12, somewhere around there. Now, someone who wants to go in and short Amazon and looks at the aftermarket and sees a thinly traded market, you know, maybe from 165.18 down to 165, he can only get about 2,200 off, and he wants to sell about 10,000, and he owns these 165 puts. You get this question of like, oh, my put, I sold the 165 put, I'm out of the money, I'm never going to be assigned because it closed 68 cents out of the money, or even in the aftermarket, it's 20 cents out of the money. No one would ever assign me on that or put me the stock because they could just go in the aftermarket and sell it. Well, that's not always the case. We had some people that, you know, we had to explain that even though you're out of the money, the exercise holder has the right to exercise that option, even if it is out of the money. And there's certain cases, while rare, where you will see, you know, an out of the money option exercise so they can sell. And I usually see what happens in volume. So if someone can't put on the trade they need to do in the aftermarket, they'll go ahead and exercise their right to be short at 165. And so we had a lot of discussions about that come Monday morning. I mean, have you guys ever been assigned out of the money options and been like, now why would they ever do that? Well, that's one of the reasons why.
Oh, yeah. It used to happen a lot, actually. Now it's a little easier to predict this stuff because obviously they moved the increment the auto execute or the auto exercise increment down to a penny. Yeah, and that kind of takes a lot of the question mark out of it now, where it used to be, a nickel or more. So that left a little more wiggle room. But I would hope that anyone who's doing, sizable short puts in a name like that would know enough to keep an eye on the after hours for that. Is that something maybe Option Express does, where if on expiration day, if it goes out close to the strike and there's a risk of pinning or anything along those lines, do you guys send out like an alert or an email and say, hey, watch your after hours?
If we see big positions on and stuff, and there's a chance, we'll start making outbound calls before the close, just to make people aware. I mean, not only do we send them about 2 to 3 emails the week of expiration, but, when we see Google Priceline, formerly Baidu before it's split, they're pegging a strike here, and this guy is either going to be, she's short 300 to 400 contracts, and he has a chance of being, assigned on those. We'll give them a ring just to make sure they're aware. We can check to see if they're in their account managing their positions, but we try to just make people aware that, hey, you're not free and clear. You need to make some decisions on what you want to do here. But expiration is always interesting. You get a lot of things you don't see the rest of the month. That seems to be changing with the weeklies, but the standard expiration, the third Friday of each month, we get a lot of calls on what do I do now. So it's always good to have your trading plan in place prior to getting to that point of expiration where you're not sure what you should do. Other than the expiration questions, I'm seeing a pattern here that anytime I'm on the show, you should buy. The day before, you should buy Netflix calls or buy Netflix stock, because the other thing we had a lot of people calling in was what's going on with Netflix again today. If you guys take a look at the tape, you can see I think it was closed up about $15.
Almost up 10%, yeah. Wow, look at that one.
Yeah, and, I don't know if this is everyone's darling right now.
Didn't they announce a streaming-only service today, I think, or something along those lines?
Streaming-only service, which, again, only... if you like My Bodyguard from 1985, it's a perfect, solution to stream to your...
They should call it the Sebastian streaming service. That's all.
Oh, yeah, I love it.
Nothing after 1988.
Nothing. But, and then they also were going to raise some fees, I guess, for some certain subscriptions. But I just don't see why 15, 20, why 10%, 9% is the move that it had today. Just, it's incredible. So that one I'm probably going to be stay away from for a while. But other than that, shortened holiday week, so people are trying to just call in and find out, hey, can I trade on Thursday? No, we're closed, and early close on Friday for the rest of everyone else.
All right, well, thanks, John. And it's kind of nice to know that, you always hear about people calling into the broker, but it's kind of nice to know your broker might actually call you once in a while if you have something on that they need to notify you of. So that's a nice little cushion for Options Express customers. You might get a nice call from the sultry tones of John Griekus one night.
I'm usually the one doing it, too. I'm like, hey, just want to let you know. And he's like, and they're usually aware. Those type of traders are aware of the positions, but a lot of them always can't be at their computer, so we try to reach out and see if they need any action to be taking place on their behalf.
Now that you're on the show, do you have a lot of people kind of swooning and not believing it's actually you that's talking to them? And
nonstop. I get more personal calls than I do actually about trading now. It's just terrible.
All those ladies calling in, can I have John Griegus, please? I have a one-lot that needs his personal attention.
Yep, something like that.
All right, John, thanks for that. And with that, we will close out the Express/Spread block.
The strategy block.
All right, and welcome to the strategy block. This is the segment of the show where we all sit back, we sip our Long Island iced teas, and we listen to Uncle Mike and his words of wisdom. And Uncle Mike, what do you have on the docket for us today?
Well, I like how it's gone from we roast marshmallows to Long Island iced tea, so this is apparently getting more and more painful as we do this.
Getting a little more casual, a little more, the smoking jackets are coming out. We're changing venues. It can't always be camping. It's got to change it up a little bit.
There we go. That'll work. Well, today what I want to talk about is the other side of the apartment rental analogy. Oftentimes in the option education world, you'll hear premium selling or covered calls or pretty much any type of option selling strategy compared to owning an apartment and collecting rent from your tenants. And I think it's a good analogy, but I want to kind of give you my take on the completeness that you need to have when thinking that way. First off, the analogy is that, let's just use a covered call as an easy example. If you own a stock, it's like owning a building. And when you sell calls against that stock, it's like collecting rent from your tenants. It's like you're renting out the stock or the upside potential of the stock. And like I said, I don't have a problem with that because oftentimes you sell covered calls monthly and you collect monthly rently. So I think that's okay. But here's the side of it that I think you really need to be aware of when coming up with a trading strategy, whether you're looking at a covered call, whether you're looking at a credit spread, or whatever type of income-based strategy that you're using as an option trader. You're going to lose sometimes. And with that in mind, let's say that you're looking to make 1% a month in your covered call strategy. Well, I don't think that's unrealistic. I think that 1% a month in some blue chip stocks, I think that's a realistic thing that you can definitely achieve in the world of covered call sales. But here's the thing with which you need to take a look at. There's going to be months that the stock itself goes down 2%, and that 1% with which you make isn't going to cover the 2% loss that you took in the stock, and you're actually going to be behind on it. So factor that into your trading plan. Also, as an apartment renter, and full disclosure, I've never done any apartment rentals in my life, but I do know that there's going to be times that if you own a building, you're going to have to fix the toilet. That's going to cost money. You're going to not get paid on your rent. That's going to be the case. There's going to be someone out there that doesn't pay their rent on time, or you're not going to have a renter for one of your units. So as an apartment renter needs to prepare for things like that, you as a trader need to prepare for a month that you're not going to make money. Now, oftentimes, if you're a baby boomer and you're looking for retirement income, we get a lot of clients that are looking for income-based strategies. And the way with which we try and set up an income-based distribution strategy is that if we're using covered calls as a section of it, or credit spreads, or whatever the case may be, we like to set up a pool of money that they'll take X amount of dollars out every month for 12 months, let's say, and everybody's different. Now, what we're doing is we're using the covered calls or the option strategy to finance what's taken out of the honeypot, so to speak, so that way we have factored in, well, we could lose X amount of months in a row and you'll still be able to get your income without disturbing the amount of contracts involved. Because of the fact that we win some months, we lose some months. So what I'd encourage you to do is don't buy into the rose-colored glasses, or don't look at this with rose-colored glasses when you're looking for income. You're not going to make money every month. Come up with a plan to set it up so that you have an income based upon the months that you make money and on the months that you lose money. And that's what we help people with all the time.
And that's one to grow on. All right, and now we will move into Around the Block.
Around the Block.
And welcome to the Around the Block segment. This is where we take a look at some of the interesting things that we're looking at for the next couple of sessions. And I know, Mr. Sebastian, you've been keeping an eye on our nonlinear theta here. How's that looking?
Mm-hmm. It's still there. Yeah, it's still there. The easiest way to look at it is, where's the SPX, where's the VIX? Where is, any of the indexes, and where's volatility? Again, the VIX was up 0.33 today, okay? When you adjust for weekend decay, the VIX was down, okay? So market down, VIX down. We are basically all the way through next weekend. Unless we get a massive pop in volatility, I am very, very wary about selling a lot of premium, especially in the indexes. I think if we see vol fall much further, implied vol fall much further, so if I see a VIX get into the low 17s, I may just take a wire on some cheap puts because I'm going to own them basically for free over a 5-day period. That's the kind of bet that traders like to take. I don't know. What do you think, Mark?
If all your decay's already priced out, then you might as well take a flyer. You know, you see so many of these retail guys coming in on, like, you know, Wednesday afternoon saying, I'm going to crush some premium ahead of the weekend or ahead of the holiday. And it's, you know, just too late to the party.
For a week and a half.
Yeah.
It's the same guy you're selling those Dollar General puts for 15 cents. You know, he's just too late to the party.
Yeah, exactly.
You should have called Mike Tusaw first. He would have got some expert guidance on when to sell those things.
Tusaw would have had a couple of tips for him. So,
what are you looking at for the next couple of sessions, Mike?
Well, I mean, we have a big day on Wednesday in terms of the economic indicators, with the existing home sales, personal income, durable orders, and you know, with the vol the way it is, and the fact that we are in a holiday week, I'm not expecting too much movement this week, and a lot of the trades of which we're doing, we're kind of expecting that as well. Just one to where we're just trying to make sure that we're positioned well, so to speak, or in the best possible way for the year end is kind of more how we're looking right now, and not expecting too much over the course of the next few days.
And let me warn people that, you know, Friday, that half day, believe it or not, I think there's going to be a ton of people looking at the retail numbers that come, retail estimates from Black Friday and from the weekend. And so I could imagine an increase in implied volatility happening on the morning of Friday.
I guess you get some early numbers coming in from like the Midnight Madness sales coming in at that point, and also online.
You'll get
I think the news outlets will be like, oh, it was, you know, this place was packed, or it was dead. So I think Mark's got a point there. And I got to tell you, I worked last Friday or the Friday after Thanksgiving last year, and it was busy. It was slammed here.
Yeah.
I'm not sure.
Well, we had the Dubai debacle, and the Monday, you know, we could see implied vol kind of increase a little on Friday, and then Monday, what they do is they actually come out with a big retail sales estimate for what happened on that day, on Black Friday. And that could really, really have a strong effect on the market on Monday. And so I don't see a lot of value in being short into the weekend anyway. You know, I would consider just kind of closing it up, calling it a day, relaxing, and, you know, if you want to get back in on the following Monday or Tuesday, go ahead. Mike or John, what do you guys think?
Like I said, I think you might see some move as a volatility on Friday with that VIX around 18.5 right now, slightly below. Yeah, maybe. Yeah. And you said, why are you going to sell it anyway? Because there's no vol or premium to sell. You may want to put something on small, you know, maybe a small vol play. No, I was just saying that there might be a small long vol play to go into the weekend that you might get in at a cheaper price than you otherwise might on Monday. Just because I have seen, I have seen some movement on Friday. Everyone thinks everything's wrapped up. Maybe liquidity dries up, and that's what's moving it. But you know, maybe it's a chance to get in at these low vol levels. I said White Castle in the stuffing is the best way to go. That's the best stuffing. That's what I recommend.
a little holiday tip from the Grigas family to yours. Yeah, you know, I definitely consider Black Friday to be the big retail sales number for them. I mean, forget the retail sales. That is true boots on the ground retail sales numbers. And then kind of the mythical Cyber Monday that follows that up. I mean, you could debate whether that actually happens on the following Monday. But by midday on Friday, we should have a good handle, at least early midday, on how the midnight and early morning stampede stuff has gone. If there's blood on the retail streets, then we'll know it's a good Black Friday.
Exactly.
There we go.
You guys going to be out there fighting for plasma TVs and whatnot in the wee hours on Friday?
I'm babysitting my kids and praying my wife doesn't buy too much stuff. So I have a prayer request to go out to everyone listening. Please protect our pocketbook.
All right, and that's going to do it for this episode of The Option Block. And be sure to stay tuned to good old Greasy Meatball and his optionpit.com for more of his wit and wisdom and his exploration of non-linear time decay. Of course, you can always find John and Rob and Tim and the rest of the gang at Options Express over at optionsexpress.com. And of course, if you want more of the wit and wisdom of Mike Tusaw, then head on over to knowyouroptionsinc.com. And Mike, I hear you have a special holiday treat in store for some of our listeners coming up. So why don't you give us a little bit of a preview of that?
Yeah, depending on when you're listening to this, we have a webinar coming on today. I'll say today because the show will be coming out on Tuesday the 23rd at ise.com. I'll be speaking on the currency options and talking about some ways with which we use them in our portfolios at Know Your Options. So if you get a free moment, go to ise.com at 4:30 p.m. Eastern Time.
And hopefully they will record that for you, too. So if someone
it'll be available.
So our listeners should have plenty of time to surf on over to ise.com and check it out. While they're there at ise.com, they can always find our Options Insider news ticket right there on their homepage, or they can just surf onto our main page itself, theoptionsinsider.com, to get all the latest breaking news and analysis and unusual activity from the options market, as well as all of your favorite options-themed audio programs. We're adding more all the time, and we have a lot of good stuff still coming up from the FIA show a few weeks ago. Like I said, our audio team got a little bit decimated by the flu, but now we're back up and running again. We're getting all of our back audio that we recorded up on the site. So if you're a subscriber out in iTunes, you'll have that stuff coming your way pretty soon. All right, so that's going to do it for this episode of the Option Block. I want to thank you guys for downloading and streaming this program. And we're going to take the rest of the week off, so no holiday-themed episodes. So everyone, enjoy your Thanksgiving and your holiday times, and don't get too crazy on Black Friday, and don't get trampled. And we'll see you here again next week for another episode of The Option.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved.